Everyone is sure that crypto's big moment, the crazy boom, the terrible bust, and all that endless talk happened, and then it didn't. Over, old, past, it's done. But take a look at what big companies like BlackRock, states, and central banks are doing behind the scenes right now. The story it tells is very different. You'll never see Bitcoin or XRP the same way again after you really understand it. The government looked at crypto like it was a crazy lab project for years. A lot of care would be taken to watch, warnings would be issued, and there might be hints of future rules. There's no more of that faraway, doubtful look. Governments didn't just let crypto happen in 2025. They began actively putting it into systems in the real world. Think back to when the internet was first created. At first, officials didn't believe it at all. Then there were rules, and in the end, they built whole systems on top of it. That is exactly what is happening now with Bitcoin and other digital assets. Join the XRP Insiders Elite right now if you want to get ahead like the top 1% by getting access to special information, methods, and real-time moves that can help you make a lot of money. Universities pay a lot of money for this edge, and it's in the movie description. No longer are countries arguing about whether crypto should be included in their laws. Their minds are working out just how to fit it in. Strategic reserves, cross-border payments, instant settlements, bringing in more tourists, and even updating the core banking lines are all things that need to be done. Both governments and banks move carefully and steadily, but once they agree, it's over. Real price discovery starts when people stop being defensively cautious and start integrating their operations. And that's the huge turn that most people missed. It should have broken the internet with this next event because of that. They said live on CNBC that JP Morgan is now taking Bitcoin as collateral for loans and will soon also accept Ether. Let's look at what this really means. Lending money is only possible with collateral. US Treasuries, homes, cash, and blue chip investments. As soon as Bitcoin gets to that level, it's no longer seen as a risky investment. It's seen as real property and a safe place to keep money that institutions can trust. Remember when Jamie Dimon made fun of Bitcoin by calling it a pet rock? He's become a lot kinder lately, and for good reason. People who are wealthy don't sell valuable things like real estate to get cash. They use them to borrow money. That's how wealth builds up over time. Bitcoin is now in that exact area. Day traders and small-scale investors are not getting this from JP Morgan. It's a straight response to what hedge funds, asset managers, and wealthy clients want. This is Bitcoin becoming a fundamental part of the banking system. CNBC also talked about another big step forward by looking at things from a world perspective. Thailand is openly letting tourists use Bitcoin. At first, it might seem niche, but think about how big it is. One of Thailand's biggest economic drivers is tourism, which brings in billions of baht every year from millions of tourists. When a stranger comes, they easily spend Bitcoin. There are no trades, no huge fees, and no problems. This means that Bitcoin is no longer a risky bet, but rather money that can be used in everyday life. Memes rarely lead to real acceptance. It grows through quiet belief and usefulness. Remember when Apple Pay first came out? Some doubters laughed. Why would someone wave a phone at a terminal? It's everywhere now, and cash is quickly going away. We're seeing the same natural change happen with crypto. The tipping point has been reached when people can do business without even noticing the blockchain. BlackRock's aggressive moves speed up this trend. They're not even looking into crypto anymore. That time has long since passed. There are dozens of high-level jobs open at BlackRock for their digital assets division in cities like New York, London, Dublin, and Singapore. The jobs cover product planning, compliance, engineering, and fund operations. You don't hire this many people all at once unless you have big product launches planned. They don't follow trends or make ETFs out of the blue. Their goal is huge. Each flagship fund should have $100 billion in assets under control. The first act was Bitcoin's ETF. As institutional flows mature, there will be a shift to a wider range of digital assets. In 2026, XRP and Solana are likely to be the next big thing. These job posts scream, get ready, scale up infrastructure before demand goes through the roof. Think about the order. BlackRock builds the tracks first and then lets everyone in. When Bitcoin reaches its peak of power and then starts to fall, investors look for the next big bet. If BlackRock doesn't have an XRP ETF when that rotation happens, clients will go to competitors, which will hurt fee income. That's not going to happen. Preparations like filings, conversations with the SEC, and setting up control have already been made. The timing is perfect. Keep Bitcoin at the top while taking advantage of the expected shift. Japan adds another important layer. Stablecoins and other digital assets need to be supervised by a trust bank in order to work properly. It is legal for these trust banks to handle deposits, custody, issuing, and large-scale fund movements. They're the only way to get into Japan's very controlled system. Here, partnerships aren't just on the surface. For scalable entry, they are the required toll booth. Before committing, Japan wants strict rules, but once they're in, integration is forever. SBI Holdings is at the center of this web, and it has strong ties to both BlackBerry and Ripple. Ripple works with a number of large Japanese banks to add the XRP ledger straight to old systems, not as a disruptive replacement, but as an improvement. In comparison, SWIFT feels like old-fashioned faxing. It's slow, complicated, and expensive. The XRP ledger lets you send quick messages and settle transactions. Banks don't switch core rails around often. They set standards to save time and money. Japan is very methodical, so once volume is routed, it moves steadily and grows very quickly. This isn't just a short-term test, it's a permanent method. To get a better idea of how this infrastructure develops, think about how adoption rates are rising around the world right now. Bitcoin is no longer just held in savings by governments around the world. They are constantly putting digital assets to use in economic and payment systems. The US set up its strategic Bitcoin reserve earlier this year. Instead of selling off stolen assets, the government kept them as a permanent store of value. Other countries did the same thing. For example, Bhutan and El Salvador increased their lands by mining more efficiently and integrating their policies. This is not speculation-based hoarding. Treating Bitcoin as digital gold in national balance sheets is a smart move. When it comes to payments, stablecoins were the bridge that no one saw coming. In the US, the Genius Act made it clear how to issue. Stablecoins can be used as controlled infrastructure if they have full reserve backing, are clear, and can be redeemed. Japan did the same thing, passing standards that put compliance first while still allowing real-world use. The RLUSD stablecoin from Ripple, which is fully backed and inspected every month, became popular because it meets these new requirements. Because of the relationship with SBI VC Trade, RLUSD will be available in Japan starting in the first quarter of 2026. This will give institutions and users a safe USD-pegged tool for cross-border flows that doesn't involve volatility risks. SBI plays a very important role. They have a big stake in Ripple and have been using XRP ledger technology in Japanese banks for many years. Over 80% of Japan's banks now use or are testing RippleNet products, not because they are cool, but because they work better. Sending money through SBI Remit with XRP cuts costs by a huge amount and settles in seconds, showing that the ledger is better than older systems like SWIFT. This is not removal, it is addition. Banks keep their power while speeding up transactions and lowering fees. It's not possible to switch back once these lines are live at scale. BlackRock's recent hire spree shows that the company is ready. New job postings for top digital asset roles in Singapore, New York, and other places focus on growing products, making tokens, stablecoins, and following the rules. The queue is full, so they are now putting together the team. Bitcoin and Ethereum ETFs are now fully developed and have huge AUM, but rotation needs a wide range of choices. Even though BlackRock hasn't officially applied for an XRP ETF yet, they are ready to move quickly if rivals like Grayscale, Bitwise, and Franklin Templeton continue to bring a lot of money into their existing XRP products. The fact that those funds already have more than $1 billion in assets shows that demand goes beyond the top two coins. Thailand's efforts show how tourism can be integrated in the real world. Their crypto-to-BART conversion sandbox and Phuket pilot let tourists use Bitcoin easily and change it to the local currency without any problems. Merchants get cash, tourists spend cryptocurrency, and everyone benefits without having to change their habits. This adds billions to the economy every year on a national level, showing that politicians put practicality ahead of ideology. Bitcoin and Ether are now official assets on JP Morgan's balance sheets, thanks to their collateral program, which is now open to business clients. When buyers pledge directly instead of through ETFs, they can get liquidity without selling, which is similar to how elites handle real estate or stocks. Third-party custody lowers risks, and global rollout lets hedge funds around the world make the most of their assets by using leverage effectively. This change to the plumbing brings more money into crypto without causing major price drops. All of these threads lead to the same truth. Crypto is moving from being a new product to being a basic need. Stablecoins handle volume, ledgers handle settlement, ETFs handle access, and rules make sure that everything stays the same. Retailers often go after pumps, but institutions grow when stores merge because it is linked to real payment corridors, regulatory clarity, resolution after the SEC, and future RLUSD synergy. XRP is in the middle of all of these changes. In terms of U.S. policy, the removal of restrictive guidelines like SAB 121 made it possible for banks to directly hold digital assets. National trust charters for guardians like BitGo show that the company is mature. Genius stablecoin rules put safety first, but allow for new ideas supporting both private and bank-issued coins like RLUSD. This mixed plan makes the dollar stronger around the world while also adding blockchain efficiency. In Asia, Hong Kong and Singapore improved licensing for places and issuers, putting more focus on reserve quality and being able to work with other countries. With the release of dozens of licenses, Europe's MyCA framework went from being a big deal to a practical gatekeeper. Around the world, people are paying more attention to payments and tokenization than to pure speculating. This is exactly where XRP Ledger shines. BlackRock's BYDL tokenized fund grew to billions of dollars, showing that on-chain assets can be used on a large scale. It seems natural to apply that to bigger environments, such as settlement-focused tokens. Hiring people to work in fund services and tokenization is a good start. Because of Japan's trust bank rules for digital assets, partners like SBI are very important. Because they work closely with Ripple, XRP won't be left out. It's the link between stablecoins and instant payments and money transfers. Volume builds up slowly until it fills up the hallways. The best sign of a bull market is this dull phase. First, the infrastructure is finished, then the use goes through the roof, and prices go up without permission. Governments keep reserves and payments safe, banks hold and protect assets, asset managers make goods bigger, and networks like XRP Ledger handle the flows. When you look deeper into institutional ordering, you see that there is even more conviction building going on behind the scenes. The big players aren't waiting for everything to be perfect. They are putting money into the foundations right now because they expect demand to go through the roof once the project has been approved by regulators and shown to work. This is not advice about money. When you look deeper into institutional ordering, you see that there is even more conviction building going on behind the scenes. The big players aren't waiting for everything to be perfect. They are putting money into the foundations right now because they expect demand to go through the roof once the project has been approved by regulators and shown to work. The U.S. Strategic Bitcoin Reserve was created by executive order in March 2025. It made Bitcoin a real national asset by putting all of the lost holdings in one place. These holdings are now worth tens of billions of dollars and can be used to buy things without spending any money. This is not a guessing game. It's a sovereign plan like having gold reserves, but Bitcoin is harder to get and can be taken with you. Countries like Bhutan grew their mining operations, and even central banks in Europe started testing digital assets as a way to diversify their portfolios in times of currency stress. Stablecoins were the quiet force that connected old and new ways of handling money. Federal rules, full reserves, openness, and direct redemption were all added by the Genius Act. This turned them from gray area tools into bank-grade infrastructure. The RLUSD backed 1.1 with audited funds, which was exactly in line with plans for Japan to get it through SBI VC trade in the first quarter of 2026. And that's a big market. Japan's remittance lanes alone handle a huge amount of money, and RLUSD gives institutions that route through the XRP Ledger stable USD access. SBI has a lot of power. This company has been a major backer and partner of Ripple for many years and has put XRPL technology into dozens of Japanese banks. Over 80% merger goals by the end of the year are not just words. They're rolling out slowly, cutting settlement times from days to seconds and prices by a huge amount. Frameworks for trust banks make sure that everything stays sealed, which turns relationships into permanent rails. It gets exponential once the amount is locked in. BlackRock is still moving forward. Their tokenized Boydell fund has grown to over $2.5 billion, adding new chains like BNB to make it easier for more people to use and even being used as protection on Binance. That's really useful. Institutional payouts on-chain and the ability to trade with other coins makes liquidity possible. Hiring digital asset product leads, compliance experts, and tokenization engineers is a sign of the next step, which will include products other than Bitcoin and Ethereum. Even though BlackRock hasn't applied for XRP yet, the community shows that people want it. There are already billions of dollars flowing into competing spot XRP ETFs from providers like 21 Shares, Franklin Templeton, and Grayscale. This shows that investors want assets that focus on payments. Rotation happens on its own. Bitcoin grows up. Capital goes elsewhere to find return and use. BlackRock has set up its systems. Timing fits with how the market is moving. When Thailand's tourist DigiPay sandbox goes live in late 2025, it will be easy for visitors to use QR codes to change cryptocurrency to BART. Don't trade or pay fees. Merchants get cash and tourists spend it easily, putting billions of dollars into tourism without any problems. The fact that the Phuket pilot spread across the country shows that governments value easy acceptance over strict rules. The show by JP Morgan went live, institutional clients directly offering Bitcoin and Ether for loans, which are kept safely. It's not a sales trick. It's when hedge funds borrow against their assets without selling them, building up positions like prime real estate. When crypto is rolled out around the world, it becomes more integrated into credit markets. European Union's MyCA became active. There are now licenses for stablecoins and a lot of growth in tokenization. Asia made rules better. Hong Kong and Singapore are leading the way by focusing on connectivity. The story changed around the world. Over-speculation, payments, savings, and tokenization. This alignment isn't a fluke. Governments protect their funds and bring payments up to date. Stablecoins are held, backed, and issued by banks. ETFs and tokenized funds let asset managers give more people access. XRPL and other networks handle efficient and legal processes. XRP is the link, and RLUSD is the safe layer. Now we live in a dull time. Infrastructure is finished, and use is slowly growing. Retail often replies last, going after highs after institutions have already made their moves. More ETFs will be rotating, reserves will grow, and the price will reflect embedded utility instead of permission by 2026 when RLUSD moves to Japan. This is how the plan is coming together. Permanence over trends and conviction over hype. The 1% at the top can see it. They're allocating now, building jobs quietly while the news is busy. Join the XRP Experts Elite today if you want to get the exact information, real-time strategies, and institutional level positioning that will help you make huge gains from this shift before everyone else does. In the video description, you can find exclusive alpha, tried and true plays, and the edge that the pros use.